Hi, and welcome back again to Tim Bigham's Big Time Options, Edges and Hedges. Taking a look today at Intel, INTC, a stock like many of the chip related and AI related stocks, certainly at extremes on a valuation, technical, and implied volatility standpoint, and how I'm going to trade it to best capture these extremes, as we always like to do. We use that fusion approach, combining the fundamental technical analysis and, most importantly, implied volatility analysis. So let's jump in and take a look, shall we? First, from a fundamental perspective, I pulled off the price to sales chart on Intel going back just this year, right? And going back 20 years, you can see price to sales, because Intel just recently was losing money, right? Finally, as we'll see in a second, making some money, but price to sales at by far the highest multiple ever, right? You can see that huge lift from basically the end of March, when stocks were pretty much on the low, where price of sales was just hovering right around 4, to now well over 9 times on a price to sales basis. Here's a longer look on the 20-year chart. You can see it's going absolutely hyperbolic. Here's a quick headline I pulled off of CNBC, one that I think encapsulates everything here. Intel stock more than doubles in April, right? For the best month in the chip maker's 55 years on NASDAQ. So this was by far the best month that Intel has ever had. It jumped over 100%, right? Lifting the chip maker's market cap. And it went up again, on Friday after this article kind of was put together. So the now market cap is basically at $500 billion, right? By far the best month in the 55-year history of NASDAQ. The prior month was 70%, all the way back in 1973. Stock making a new all-time high, right? Exceeding the NASDAQ mania, right? The dot-com bubble highs back in 2000. Here you can see the earnings, right? They did report earnings on April 23rd, right? And they did beat, right? They're looking for basically a small loss, had a decent gain, right? Big percentage surprise, right? But we're talking about very small numbers here. You can see previously, right, they had lost, made a little bit more, right? But on a forward basis, right? So that big beat, if you will, right, has more than doubled the stock price. We'll see in a second what it has done to the technicals as well. And that doubling in the stock price, as we said, lifted price to sales. And this includes the revenue numbers in that price to sales calculation. Just exploded them, more than doubled, because the stock price went up over 100% with a very nice lift in actual sales. So how much do they have to continue to beat by to justify this remains to be seen. But as we said, here were the earnings coming out. Even on a forward basis, right, the December 2027, right, analyst estimates by 16 analysts, 2 of them who have recently revised, obviously, but even using the highest earnings per share for all of 2027 at $1.25, right, the consensus, if you will, the average is under a buck, right? But even using the highest EPS estimate, it still puts Intel at the current price at over 80 times PE on a forward basis. So certainly, no question, rich from a fundamental perspective. How much they will have to continue to just knock it way out of the park to justify the stock price going forward remains to be seen. On a technical basis, here you can see the stock briefly traded over 100 on Friday, did pull back slightly to close at 99.62. 9-day RSI trading over 90, believe it or not. That's by far the highest we have seen over the past year. It had bumped up against 85 several times, which did mark at least short-term kind of tops, if you will, in the stock. MACD at the highest level we've seen over the prior 12 months. Bollinger percent B, even with IV still elevated, this has an IV component, trading basically just over 100, which is normally a very rich area indeed. You can see how that coincides for at least pullbacks in the stock. Shares trading at a massive premium to that 20-day moving average, right? By far, you can see previous times it kind of popped above there where it became noticeable, always pulled back to the 20-day moving average. You can see that huge gap, right? Post earnings, and earnings, as we said, came out on the 23rd after the close. That huge gap opening, which should provide some support. That's actually part of our trade structure. We'll take a look at it in a second, using some of the technical support here for downside position structuring. And then we'd always like to take a look, as we said, at implied volatility analysis. Here's the IV, and remember, this is post earnings that came out on the 23rd. We've had basically a week's worth of trading since then. IV still hanging at the highest level, even post earnings, right? You can see that Thursday to Friday, we saw that huge jump in IV again, right? IV had calmed down, still at high levels, but now back up to the highest levels again. Took a quick look. Here is kind of a 20-day look at IV on Intel Generalized. Here is the earnings date, right, April 23rd. You see the normal vol crush post earnings, right? Vol trickled down to the mid 65 level, right? But then since then, we've seen a vol rush. IV now higher than it was pre-earnings, believe it or not. So you're able to, in essence, sell earnings plus implied volatility, even though earnings are out, right? And you can also see that the calls are the reason for this, right? The call IV much higher than the put IV by 3 vol points. Normally they tend to be about even or so, chopping back and forth around, but you see that huge jump as Intel just rips higher, right? Everyone rushing in to buy calls, especially out of the money calls. High IV means the option prices have gotten much more expensive. You can take a look again at it. Here is the June options, which we're going to be using for our trade, right? Moved up 4 vol points from Thursday to Friday. Current IV percentile basically at the highest level of the year. 98% was briefly there, as we said, the one day a couple of days ago, but we're trading at IV much higher than it was when pre-earnings, which is unusual to say the least. Here's a 2-year chart, and I took a 60-day 25 deltas out of the money call, right? You can see IV at by far the highest level over the past 2 years, has softened slightly, and I do mean slightly from the all-time highs, just a trickle down, as we said here, the all-time highs, that kind of 80 level, now pulling back slightly, but still at extremes. Here's a 3-month look at it, right? Both puts and calls in the green, puts in the yellow. You can see IV still very much elevated on both fronts, and you can see the call IV now trading at that big premium to the put IV, right? Normally, right, back here where it's kind of more normal circumstances, puts traded at slightly higher IV, which is normal for almost every stock, but we've seen now calls because of the huge, call buying coming in on not only Intel, but the other chip-related names, pushing the call IV to an extreme versus the puts. So how do we go about setting up the trade to capture the fact that valuations are absolutely stretched, right? IV, as we said, at an extreme as well, and the technicals certainly getting stretched. Well, I'm not going to say that Intel's, going to have a major, crash here or anything, right? But I think it's probably due to at least slow down, right? And have that implied volatility, right? Which we see at the highest level, even post earnings, start to head back lower. So we like to do a trade that benefits greatly from selling implied volatility and do it in a somewhat neutral fashion, right? I have no idea how much longer this mania, if you will, can last, but you do know at some point it can't keep up the same pace. So I like going out to the June options, have about 50 days, a little bit less until expiration. It's before the next earnings come out, obviously. Going out, selling the 80-75 put spread and the 125, 130 call spread selling that iron condor, getting about $1.80 or so net credit on the trade, selling about an 80 IV. So you're selling the highest implied volatility we have basically ever seen in Intel, right? Even with the stock on all-time highs, right? So we're able, in essence, get further out of the money for the same net credit, get a bigger net credit for the same amount out of the money, or combine the two like this trade, get a little bit bigger cushion, a little bit bigger net credit. So that'd be selling the 75.80 put spread, the 125, 130 call spread, do it as a package. And I would say $1.75 is probably going to be absolutely doable, right? So do it for $1.75 net credit. So that's your max gain is $175 for each iron condor you sell. Max risk, because it's a 5-point wide spread, right, is $325. Only one side can get in trouble. So your return on risk, very nice, over 53, almost 54% return on risk. Upside break even, 126.75, right, for whatever reason this rounded up. So over 27% further upside from where it's trading at now. This is after a over 114% rally as we've seen in Intel off the low. So you have further upside cushion. The downside, right, 78.25. Why'd we choose that? That's that gap open level here on the chart. So that's kind of our downside area where we'd probably start to look to re-hedge or so if it approaches that. So certainly these gaps usually tend to provide some good support, right? And Intel did have good earnings. The upside is above 125, which literally is off the chart here, right? So we can't even put a line there, right? Simply because it's not available on the chart because of this huge rally we've seen in Intel. Wasn't too long ago that Intel was trading under $20, now briefly traded over 100, so a monster rally to say the least. So that's the trade we really like. Days expiration, we said less than 50, selling over an 80 IV, 82 on the calls, right? And almost 80 on the put. So the calls, as we said, carrying a higher IV, which is unusual to say the least. Delta on the trade, right, as neutral as you can be, right? So the call spread, right, selling at 27, buying at 23. So you're 4 delta short there. On the put side, selling a negative 18, buying a negative 13. So you're 5 deltas long. So about as neutral trade as you can get on Intel. It's really to capture implied volatility. We'll take a look at a second, how to figure out what kind of edge we have on this, right? And the fact that I think the upside will have to at least slow, and as we know in this market, the downside, at least for the short term, seems to be muted. I don't think it's going to crash, but we got plenty of room, right? We have 20% downside till we get in trouble on this, and we have shorter term, expirations on the weeklies to further hedge either by selling out of the money put spread if the stock continues to rally, right, to bring in a little more premium, or now the money call spread if the stock continues or pulls back, I should say. So we have plenty of room to take advantage of that high IV by hedging with shorter term spreads, right? Bring in more premium, reduce our max risk, increase our max gain potentially on that. So it's a very nice advantage to using these periods where you have high implied volatility. You can really use some hedging strategies very effectively. And taking a look at what happens to IV, I pulled off, here's the IV currently on the trade red, on the calls and the puts. So selling the 125 call, as we said, at about an 82 IV, buying the 130, 83, right? You'd bring in about 73 cents net credit, right? 425 and 352 on the theoretical prices here. And then, excuse me, we had a little blurb there, 425 and 352. So 73 cents on the call side. And then on the put side, right, 313 currently, and 211, 102. So we're probably around $1.75, and that's why we kind of use that on our trade, right? Going back here, that 175. But let's say we just get a 5 vol point drop, right? We're not talking about a massive pullback here, just a 5 vol point drop back to this area here above where it had gotten to. Then this again was the highest we have ever seen on Intel, right? But above this level here, just approaching this level here, if we have that 5-point IV pullback, which we absolutely expect somewhere along the road, gives us a very nice edge on the trade. With a 5-point drop, the call spread only becomes worth 69 cents, right? Right now it's worth about 73 cents. So a nice 4-cent edge doesn't seem like a lot. We'll see in a second. It does add up. And the put spread, right, drops to 93 cents from over $1 currently. So you have about 10 cents and 5 cents. So you actually pick up 13 cents by having the IV just drop 5 vol points. If it drops more, even better. So I took a look now. We're IV roughly at 80. You can see there's our return structure, right? 175, which we can sell it at now, right? Gain 325, risk for that almost 54%. If IV just drops 5 vol points to 75, the spread, everything else being equal, right? We're positive theta in a big way too on this, right? Drops to $162, or you pick up 13 more bucks, right? Your risk drops to 338 from 325, right? So you have much less risk on the trade here in this example here, right? So 48% overall net potential return. So your potential return drops, your risk increases, right? 325 risk currently, 338 just with a 5-point IV drop, right? So you're able to get a bigger return because of that lowered risk, bigger net credit currently, all because the IV is at that extreme. If IV softens just a little bit, and again, we're just talking moving from where it is currently down to this area here, right, you have a very nice theoretical edge on the trade. So hopefully provide some insight how we go about identifying trades, structuring it here, but with Intel at extremes on a fundamental valuation basis, no doubt, right, the stock trading at by far the highest price to sales multiple we have ever seen on Intel, with the technicals in essence at the highest level by far we've seen over the past year, no question, right, on every sort of technical metric, and with IV at the highest level basically ever seen here. As we said, that 2-year chart, you can see IV at the highest level we've seen over the past 2 years. Everything adds up to kind of selling the extremes, but doing it in that neutral fashion, right? It doesn't mean that Intel is going to have a pullback here, but I think the rally will slow, and I think that 80 area where it kind of gap open to post earnings, not a bad place to be saying if it does pull back, that certainly should be a support area. So until next time, as always, here's the good trading. Take care.